Hey, what's going on everybody? Welcome back to the channel. I'm Waller's Wallet, and in this video, we're going to take a look at Fidelity's Robo Advisor, Fidelity Go, and see if using Fidelity's Robo Advisor is something you should even consider using. Now, if you want a simple way to help out the channel, consider hitting that thumbs up button. Also, don't forget to subscribe to the channel and turn that bell notification on as well so you don't miss out on future videos. Now, Robo Advisors are becoming more popular, especially with the younger generations. And there are many different options and platforms available for you if you're someone trying to decide on a robo-advisor. Now, Fidelity Go, they offer a few different investment options, including traditional and Roth IRAs, rollover IRAs, and even taxable investment accounts. Now, just like with other robo-advisors, you're going to be asked a series of questions. This is going to help the software determine your risk tolerance and build out a portfolio that best suits you. Now, you'll need to enter in your age if this is an individual or a joint account. Then you'll need to enter in if this is a retirement account or not. And then you also need to tell them how much money you plan as an initial investment and how much you plan to contribute each and every month. Then you'll also need to put in your household income. Then lastly, you need to rate your risk tolerance. And once you give Fidelity that information, Fidelity is going to give you an investment plan they think that would work best for you. And you can change the dates of your retirement or contributions to see the potential value that can change. And Fidelity does show you the potential of what your investment will look like over time. And they have other questions as well that could adjust your risk tolerance. And this really should be asked as you're setting up your account, as instead of just additional questions that you need to go find. Because questions like what you would do if the market dips is really another way to measure your risk tolerance. And at any time, if you wanted to make a change to your investment strategy, you can do that, and Fidelity will adjust your portfolio allocations, which means they could be changing the funds they invest in as well. Then you just need to fund your account and you're good to go. Now, you do need to fund your account with at least $10 to use the strategy that you've selected. Anything under $10 will be put into a short-term investment option until you hit that $10 minimum. But when it comes to the different ways Fidelity could invest your money, they have 7 different portfolio options. And these allocations are going to range from a more conservative approach, which breaks down to an allocation of 14% domestic stocks, 6% foreign stocks, 50% bonds, and 30% short-term equities. And this will go all the way up to a more aggressive option, which has an allocation of 60% domestic stocks, 25% foreign stocks, and 15% bonds. And there are plenty of mixes in between based on your risk tolerance. But these are it. You don't get any flexibility to choose different allocation percentages or have more of a say in your investment options. Then with Fidelity Go, Fidelity mostly uses their Fidelity Flex funds, which have no expense ratios, but they do mention they could use some other funds that may potentially have some fees. But this is more limited and it's going to be less common. And the reason for no expense ratios is because those fees are incorporated into your management fees, so the fees are just moved around. But since the funds used pretty much have no additional expense fees, the only real fee you have is that management fee, which we'll talk about in just a minute. And while Fidelity uses zero-cost funds, that doesn't mean they aren't giving you bad or underperforming options. I mean, the fund FDFIX is their Flex Value 500 Index Fund, and it matches the S&P 500 perfectly as far as performance is concerned. And it even has quarterly dividends, so this is actually pretty good. And if you were to look at FDFIX, it actually has the same performance as Vanguard's VFIAX, which is Vanguard's S&P 500 Index Fund. And the example funds Fidelity mentions they use do exactly what you would expect them to do, and that is match the indexes they were built to follow. But since the funds they could be using vary for you, the return you'll receive will also vary. Now, when it comes to fees, Fidelity has different tiers for their fees on this account. This is different compared to many other robo-advisors, which have a percentage-based fees for all of their customers. For example, Betterment charges a 0.25% fee to all of their customers, regardless of the amount of money you have in your account. But for customers with $0 to $9,999, there are no fees to use Fidelity Go. And for balances between $10,000 and $49,999, there is a flat monthly fee of $3. Then for balances over $50,000, the fee becomes a 0.35% fee. Now, the charging of no fees for accounts under $10,000, it's nice for people who are just starting out. But the 0.35% fee for balances over $50,000, it seems higher than other options like Wealthfront, Vanguard, or even Betterment. And this means you're going to pay $35 for every $10,000 you have invested, in addition to any potential fees for fund that Fidelity uses. Although this seems to be less common since they mostly use zero fund expense ratio fees. Now, I think the $3 monthly fee can confuse people or make people think it's not a lot of money because, hey, it's only $36 a year, right? And the percentage of what this is going to cost you is going to range depending on how much money you have invested in Fidelity Go. So you really should convert your monthly fee into a percentage to see how it compares to other robo-advisors. But when you convert this fee to a percentage, it's going to range. So if your balance is $10,000, it's going to be a 0.36% fee, which does seem quite high. But once you hit $49,999, the fee drops to just 0.07%. Now, the point where the fee is 0.25% that equals options like Wealthfront or Betterment is $14,400. After that, the fee to use Fidelity Go is lower in terms of the management fee charged from Wealthfront or Betterment. And the fee increases quite a bit if your balance is over $50,000. And really, a 0.35% management fee is expensive when you compare it to other robo-advisors. Now, when I first saw a 0.35% fee, I initially thought this was not a competitive fee. But when you look at the funds that Fidelity uses, the overall fee is pretty much just 0.35%. And other robo-advisor options have their management fees in addition to the fund's expense ratios. For example, Betterment mentioned that in 2018, that's the most up-to-date article I could find on their website, that the average expense ratio for their funds was somewhere between 0.07% and 0.15%. That would mean the overall fees for a Betterment account were somewhere between 0.32% and 0.4%. So depending on the funds that were chosen for your account, your fees could actually be higher with Betterment over Fidelity Go. And this will definitely vary for each account holder. So while the 0.35% fee seems high, when you compare the overall fees from other robo-advisors, it might be right on par with them for the most part once you get beyond that $50,000 mark. For accounts under $50,000, the fees overall could be lower with Fidelity Go than using other robo-advisors. Then there are other pieces to consider here. Now, something I think that could be more limiting for people that are thinking of transferring from another institution to using Fidelity Go is that you cannot roll over or transfer your account from another institution to using Fidelity Go. That means you would need to sell your investments from the other institution, then fund your Fidelity Go with that cash. So this could create tax implications for you, so you would want to look into that. Then since Fidelity Go is a digital-only product, being able to speak to an actual person like a financial advisor is unlikely or could be very difficult to do. Then Fidelity Go, it doesn't offer any tax loss harvesting, and not offering this or having this as part of your robo-advisor service, even for people with higher balances, I do think this is a negative because that can help reduce individuals' taxes, which could boost their overall return. So while the fees are comparable to others, this could be a valuable benefit that Fidelity currently doesn't offer that other robo-advisors do offer. Then if you have a robo-advisor, you want them to handle your rebalancing. And Fidelity will rebalance your portfolio when your portfolio drifts about 1% or more from your goal allocations. Then Fidelity Go, they do have people working and handling your portfolio, so it's not all computers and algorithms like other robo-advisors. Now, Fidelity Go, it's just one of many different robo-advisors that you can select from, and the funds they offer are more restrictive since they only offer a handful of Fidelity funds that are exclusive to Fidelity Go, and they don't use other options from other institutions. In the fee structure, it tries to be more user-friendly by not having any expense ratios for their funds, but when you compare the fees to other robo-advisor options on the market, the overall fees are about the same. But Fidelity Go, it does lack tax benefits like tax loss harvesting that you can get with other robo-advisors. So for all around the same fee, I would at least like them to offer that option to help reduce your taxes. And if you're someone wanting to move from another institution, it could cause problems for you since you cannot move your funds to Fidelity Go directly. Now, Fidelity Go could be an option if you're a new investor with little money to start investing with, but you want to begin investing with no fees and you want a hands-off approach. But if you want more say in how your money's being invested, there are other robo-advisors that could give you that freedom, or maybe a robo-advisor just isn't for you. Now, do I think Fidelity Go is the best robo-advisor available? No, I don't think this is overall better than options like Betterment or even Wealthfront. But Fidelity has been around for a long time, and that might be important to someone who's trying to decide who they want to invest their money with. So let me know, what do you think of Fidelity Go? Now, if you're someone who wants to learn how to get started investing with Fidelity index funds, be sure to check out this video right here, where I tell you exactly what you need in order to get started. And if you want to support the channel, take a look at the links down in the description below. You know someone that would find this video useful? Feel free to share with them, and I'll see you in the next one. Take care.